Hello and welcome to today's edition of Business Daily, and we are set to bring you up to speed with developments in the world of business, finance, the stock market, and so much more. I am Christiana Amodu Otinya. It's a pleasure to have you join us on the program today. First, we'll begin with the headlines. We begin from the climate sector, energy transition, carbon credit markets to create positive effect on Nigeria's economy. That is from the Vice President, Professor Yemi Osinbajo. And customs impound 168 million naira petrol in Badagry amid fuel scarcity. We'll give you more update on those in the business roundup segment of the program. However, we'll take a short break. When we return, time to go into the stock market. Please stay. Welcome back. Now let's get straight into it and see what the numbers are saying. What is the outlook for the week? Now, before we get into the numbers, let's quickly give you update on what to expect for the equities market watch in the week ahead. What are the key events that will likely shape what to expect for the markets? Now, in the week ahead, we expect that the Nigeria Bureau of Statistics, that's the NBS, will release Nigeria's inflation data. We know that's a key data that investors and those in this space monitor. Also, the U.S. Federal Reserve is set to meet on Wednesday, and the Bank of England and the European Central Bank will be meeting on Thursday this week. So these are key issues that the market will be focusing on this week. The week looks, it has some kind of look, especially for investors and what to expect. Now let's go into the numbers and see what transpired on the Nigeria stock market. Now we saw a positive close for the Nigeria equities market. The all-share index, the benchmark all-share index, ended at 48,881.93, 1.07% climb there. For activity levels, a total volume of 100.82 million shares valued at 1.14 billion naira changed hands in 2,440 deals on the local birds. The equity caps settled at 26.62 trillion naira. Now the yet-to-date gain now for the Nigeria Exchange all-share index is at 14.43%. Let's go over to other African bourses, and we'll begin from the JSE in South Africa. Now we are seeing the JSE opening rather lower. The sentiment on the JSE is staying in the red territory, 73,730, and for Ghana still at the flat line. For South Africa, a lot of worries and concerns, political uncertainty surrounding President Cyril Ramaphosa's lingers, especially around the Fala fraud issue, and the scandal has continued to affect sentiments for the stock market. There's also the power utility Eskom and the unending power outages in South Africa affecting businesses, and that's what is really affecting momentum in the Southern African nation. Going over now to Wall Street, US stock futures were fractionally lower Monday ahead of a week with several anticipated events in the ongoing fight against inflation. Now it's a sea of red for U.S. markets, 0.90% downward there for the Dow Jones Industrial Average, the S&P 500 down 0.73%, and the tech-heavy Nasdaq also losing steam there, 0.07% there lower. Now the whole issue around what will be the outcome of the Fed meeting is indeed sending jitters into the stock market. Going over to Europe now, European markets equally retreated, still staying in the negative zone. For the FTSE 100 in the UK is down 0.27%, the CAC 40 0.47% lower, and the DAX in Germany down 0.47% there equally. Going over now to the Asia Pacific region, let's see what's happening in that region. Unfortunately, it's still bleeding in Asia. Now, the Nikkei 225 is down 0.21%. The Shanghai Composite there down 0.87%. And the Kospi in the South Korean Strait is down 0.67%. So a lot of red going on in the market, as you can see from the markets we have seen up till Asian markets. The focus, like I stated earlier on in the week ahead for the equities market, what will the market be watching? The equities market will be looking keenly at what will be the comments coming out from the Fed chairman, Jerome Powell, and what will be the reading for U.S. inflation. Let's go over to commodities market and see what the prices are like. Now for Brent crude, still staying at $76.39 per barrel, up 0.40% there. The bullion gold, $1,791.48 per ounce, shedding 0.28%. For palm oil still standing strong, $3,783, up 5.31%. And for cocoa is at $2,454, shedding 1.52% there. Now oil prices now, so we had statements coming in from the president of Russia, President Vladimir Putin. He has threatened to cut production in retaliation for a Western price cap on its exports. So Putin is blowing hot and he's saying that they are going to cut production, and this is coming as a retaliation on the price cap we saw coming sometime last week. For gold prices are dropping, as you can see, and this is inflation jitters basically affecting the gold. Now, lower interest rates tend to boost gold's appeal as it decreases the opportunity cost of holding the non-yielding bullion. Let's go to the cryptocurrency market and see what the sentiment is like. Still staying negative there, 1.19% down for the Bitcoin. Ethereum is at 1.51%, and Binance Coin 1.92% there lower. However, some interesting comments came in from a governor in the United States, and he was talking about issues around the Bitcoin, and he said that he has not been able to pass the smell test for him, and I quote, "I have not been able to find anybody who's been able to explain to me what's there other than synthetics, which means nothing." He further added that it may be regulated, but this may give it the ability of people to think that cryptocurrency is real, and that is also that's also nudging the negative sentiment we are seeing happening in the market. My guest on the program today is the Capital Market Academic of the Year, Professor Uche Owaleke. Prof recently got that award, and I know you follow the capital market keenly. I just want to quickly get your thoughts on what would you say about the sentiment we have seen 2022 down the line so far for the capital market?
Well, starting from the global scene, the Russian-Ukraine war has been a major factor. Till date, we are still witnessing the uncertainties that conflict, has been generating, which is why you find that in the U.S. market, for example, you can't really predict, what's going to happen. Yes, the Federal Open Market Committee will be meeting soon. Investors in the U.S. are, anxious to know what is likely to come out from that meeting. But the expectation is that the Fed would be slowing down the tightening stance. So yes, even if a tightening is being expected, it may not be, the size may be small, compared to what has happened there before. I think that's the general sentiment in the U.S. now. Now, if you look at Europe, of course, if you notice, European markets and U.S. markets, tend to flow most of the time in the same direction. Today, you've seen, for example, the Nasdaq, the Standard & Poor's, the Dow Jones, down, and similarly, you find the FTSE of London, the CAC, France, and the DAX of Germany also, following the same pattern. But of course, in Asia, what is fueling that of Asia, again, has to do more with what is happening in China. The slowdown in the growth of the Chinese economy, alongside the uncertainty surrounding, China's or the Chinese government handling of the COVID. They are relaxing restrictions, but no one is sure of where that is, the exact direction that they are headed. Now, back home in Nigeria, we are still grappling with a number of macro issues. In your introductory statement, you said that what the factors likely to shape our markets, in the coming week include the inflation numbers that will be coming out, expected on the 15th. Including the Fed, the Fed meeting. And all that. But what I need to point out here is that it does appear that our markets are ahead of these developments.
Okay, Prof, let me hold you on that thought, yes. And you give us more yes. on what to expect, especially in the coming week and for the Nigerian economy. However, before we go on a short break, let's quickly take a roundup of business stories. Vice President Yemi Osinbajo has declared that participating in the carbon market would help Nigeria and Africa the opportunity for growth, industrialization, and job creation for its teeming population. Osinbajo made the disclosure in a keynote address at a high-level international meeting on African Carbon Market Initiative hosted by the Rockefeller Foundation in New York City. And he also said that this opportunity could create 30 million jobs in the next decade, with the potential to create more than 100 million jobs through climate-aligned projects by the year 2050. Now, the SEME command of the Nigeria Customs Service on Sunday said it has intercepted a total of 38 petrol tankers in Badagry in the last 11 months with a value of about 168 million naira. Briefing newsman, the area controller Bello Jibo, said operatives of the command stormed the beach in Badagry where they seized 33,390 liters of fuel valued at 8.81 million naira last week Wednesday. They said the combined duty paid value DPV of the seized fuel stood at 167.72 million naira. And that's it for the business roundup. On today's edition of the program, we'll be looking at issues around export and the revenue generation drive of the federal government in Nigeria, and also bringing in the slant of foreign reserve, foreign exchange, how Nigeria can attract more forex into the country, and the efforts being put in place by the Apex Bank, the Central Bank of Nigeria, to ensure that we broaden our export base and make trading basically easier for exporters in the country. Professor Uche Uwaleke would be speaking more and putting perspectives to these issues after this short break. Please stay with us.
Now, as part of efforts to support Africa's goal of strengthening...
Now, looking at the activity chart, as you can see right here, a total volume of 130...
Created a Boko Haram crisis that at that time was restricted to Yobe.
How secured are they? You can see security men with blood.
This is the road leading up to the...
Really, if you look at England squad, you are looking at EPL, you are looking at their names. You are not looking at...
Welcome back, and thank you for still staying there with us on the program. Now we are going to get into the crux of the matter now for today. I still have Professor Uche Uwaleke with me. He is the President, Association of Capital Market Academics, and also Professor of Financial Markets and foremost finance analyst. Prof, you're wearing so many caps, I must add there. However, before we get into issues around export, I really want you to land on your thoughts on the Nigeria exchange being ahead of what we are seeing happening with other bourses across the world.
Yes, the point I was making is that the markets, the equities market, appears to be, ahead of the numbers. Look at what happened in November, for example. In November, the inflation figure came in at 21.09%, and a week after, the Monetary Policy Committee met and jacked up the monetary policy rates. Yes, all that did not, negatively affect performance, of the market.
Yes.
As a matter of fact, in November, the market recorded the highest, gain in the second quarter of second half of the year, at by over 8%. So the point I'm making is that the inflation number coming in on the 15th of this month may not affect performance in the market. The market will, just as in November, is likely to shrug it off. And that's because, as we speak, the year is coming to an end, so fund managers are rebalancing their portfolio, trying to take positions in stocks they think have, good fundamentals. So that is what is now pushing the market. Having looked at the third quarter performance of companies that are quoted on the exchange, many of them, reporting favorable performance, they are now projecting that the 12-year performance, will be better.
Yes.
And if it's going to be better, of course, that will mean some of them will pay dividends, and so on. So they are now trying to take advantage of that by taking positions in those stocks. So the inflation figure is already being priced into, because they're already expecting that inflation will be high.
Yes.
So all of that may not really influence the direction of the market in the coming week, and even for the rest of the month.
Okay.
Yes.
Thank you for that background, Prof. Yeah. We hope to bring you back to also speak to investment opportunities in the capital market on a later day. Of course, a lot of Nigerians are looking for where to put their money that is safe, of course.
Beautiful.
So we want you to have that at the back of your mind.
The stock market is safe. With proper advice, one can still get good returns there. Yes.
Now let's go into the issues around exports. Now the Central Bank of Nigeria is expressing hope that export proceeds from rebates would hit $1 billion mark by the fourth quarter of 2020. That's year-end 2022. And there's really a lot of conversations have trailed this since the CBN governor, Godwin Emefiele, made the disclosure after the Bankers Committee retreat we saw over the weekend. $1 billion. What does that say? What does that mean?
Well, at least $1 billion, for us, an economy like Nigeria, it may not be much, but at least we are starting somewhere. Remember that that's part of the ROT 200 billion forex program of the central bank. That's the race to 200 billion forex repatriation program of the central bank. By which the central bank expects that over the next 3 to 5 years, we should be able to attract as much as $200 billion, into this economy. So that's is within that context, that I'm saying that $1 billion, may still look small. But as I said, is a good step, particularly if you check where we are coming from. As a matter of fact, this is one policy, one program that I think, could have started well before now, given our forex challenges, given our exchange rate challenges. People often say, some people tend to blame the central bank for, the high exchange rate we have, in the country. But unfortunately, that is not correct. And that's because the central bank cannot determine exchange rate by fiat. You can't fix exchange rate.
Yes.
Exchange rate is fundamentally a function of demand and supply. So a situation in which you have, demand, outweighing supply by, so much, you can't help but have high exchange rate. So over time, the central bank has tried to manage that using, demand management strategies, because of course it realizes that it cannot, do much about supply. Remember, don't forget that the bulk of forex we receive in this country, is just from sale of crude oil, over 90%. So in that kind of situation, whenever you have shocks in that sector and nothing is coming in, there's little or nothing the central bank can do. Okay. And the CBN governor also stated that nothing is actually coming in, reducing from $3 billion to $0. Exactly, since the oil theft issue began. So the point is, we need to really look at getting forex through non-oil exports, which is what this is promoting. So when the central bank says, for example, is restricting access to forex with respect to some 41 or 42 items, it is meant to curtail demand. When the central bank says it's stopping sale of forex to BDCs, again, it's meant to curtail demand. All right. If we had enough supply, I'm sure some of these restrictions wouldn't be there. So in an effort to now boost the supply side, okay, the central bank is out with this ROT 200 program. And of course, you remember that it's also complementing the Naira for Dollar policy. Naira for Dollar policy that it introduced to encourage diaspora remittances into the country. And from what we hear from numbers that we have read, again, some improvements is being recorded in that area. But the real game changer for me is this ROT 200 billion program, which of course has 5 key pillars, 5 key components. One of which is this value adding export facility and non-oil commodities export facility. You also have the rebate scheme by which the central bank is 65 naira, for each dollar that is, repatriated.
Prof, I really want to come in here because there's a lot has been said about how these policies are good and how benefits are being yielded. But then I was able to speak to some manufacturers in the country, and manufacturers, these are the people that are indeed exporters that need Forex to run their business, and they are saying that it's still difficult, that the terrain is still difficult for them to access this Forex, and a lot of them have to fall back to the black market, and we see what that results to. Because I'm saying this because the governor also assured that there has been tremendous progress, like you mentioned, and he said they are going to try to ensure that Forex is available no matter how hard this may be. Because looking at the policy we are seeing, it looks good. We're seeing results, $1 billion for the year 2022. On the other hand, we're having exporters, manufacturers saying that we cannot access this. It is still difficult for us.
Yes, Christy, when you say access to Forex, which Forex are we talking about? We are talking about, again, access to a pool where the major source, is from one product, the sale of one product. So where the supply is limited, that is where you have the situation of, access to Forex being made difficult. Okay, it is because of the supply element, and that is why this program is necessary to boost supply. If we get to a point where supply is boosted, imagine $200 billion coming into this economy in the next 5 years. Of course, this issue about access to Forex, I'm sure, will be a thing of the past. Okay, so I think it's something that needs to be followed through. All the key stakeholders need to cooperate. A major factor that will enable this program, or this success of this program, a key success factor, if you like, is the dedicated export terminal, okay, which is also part of the one of the key pillars of the of the program. So I think by the time we get to a point where we have enough Forex flowing in, okay, especially through non-oil sources, because that's where the emphasis is, non-oil sources. Oil sources, very vulnerable, you can't really, predict it. Non-oil sources is where the issue is. And that's why the central bank is also saying that commercial banks, going forward, should begin to learn how to source Forex, from, other sources, rather than rely on the central bank to provide them, Forex. By the time we get to that point, where you have the diaspora remittances coming in, you have foreign investments coming in, whether foreign portfolio or foreign direct investment coming in, okay, we have some level of Forex that can meet the demand. I'm sure the issue of access to Forex, wouldn't be there. If the way it is now,
yes, if
the central bank opens up the port, okay, for anybody who wants Forex to come and take, that reserves will have 36 billion, between 36 and 37 billion will get freighted in no time. If you consider the rate at which the Forex is coming in, vis-a-vis what is being demanded. Yes. So demand by far outweighs supply, and that's also why you hear some of these restrictions, even restrictions now extending to the invisibles, not only for those who are demanding to produce, but to invisibles. There are now restrictions with respect to even the size of Forex, the amount of Forex you can get, to be able to pay fees, okay, or to be able to also do your medicals, because the demand for Forex to pay fees abroad is also increasing.
Yes. And
that's why the central bank is saying that there should be, some sort of restriction. As I said, it is because of the size of our reserves. Okay, if as we speak, from what we hear, we have enough to finance at least 4 or 5 months of merchandise imports. So you could say to that extent, our reserves are still, not endangered. But the moment you begin to make those available, based on demand.
Yes.
Okay.
Yes.
You get to a point where it will drop below 3 months of merchandise exports, and then that puts you into trouble. And remember too, that when you have very low reserves below the threshold, okay, you put yourself at risk of even obtaining loans. You can't get any loans from anybody when they see that you don't have any reserves. remember, your loans are serviced, from your reserves. And when a creditor is, a foreign creditor is saying that you don't have anything to
fall back on,
so it puts your reputation, credit reputation, at risk. So it's important we don't get to that point. Remember, our budget, unfortunately.
Prof, in 30 seconds,
yes,
we're out of time.
Our budget, unfortunately, is based on, debt.
Yes.
Yes, we are going to borrow not only from domestic, but from outside. So when we have that reputational risk, we won't be able to borrow from outside, and what that means is that all your budget has been, it's made nonsense of.
So much yes. to be spoken about. Thank you always, Professor Uche Uwaleke, for coming on the program to share your thoughts on what can be done basically to increase export earnings from non-oil exports, like you have mentioned, as that will also bring some sort of respite to manufacturers in the country. That's where we draw the curtains on the program today. Thank you for investing your time with us. Prof did speak about the budget. We are hoping, of course, that we'll see the budget passed in coming week to remain within the budget cycle, as we have seen this administration stay within it. Now, thank you always for investing your time with us. Don't forget, you can get all information on our social media platforms, or go on our social media platforms on YouTube and across board to get all the information you need. Trust us to bring you information at the break on the polity and in the world of business. I am Christiana Amodu Otinya. Continue to stay safe.